It's widely expected that the Monetary Policy Committee of the Reserve Bank will keep the repo rate unchanged when it meets this week. Inflation is expected to tick up slightly this year compared to last year, but will remain within the target bracket of 3 to 6%. The local economy is expected to continue on its recovery path despite the challenges it continues to face. The Reserve Bank will likely look at the impact of the Level 3 lockdown, electricity supply constraints amongst other structural impediments, and the global economic outlook. The low interest rate environment is expected to help boost consumers and businesses dealing with the effects of COVID-19 on the economy.
Our consumers has been through a lot, and to encourage economic activities, you will really need to hold the repo rate for now and ensure that consumers recover from repayments and other household means that they are expected to do. The bank will need to attend to balancing the investment interest and the consumer's interest like domestically, and that will assist in the third stage of the economic recovery plan.
Some economists say there is a possibility of an interest rate hike as soon as May this year.
If the inflation rate starts to rise quite substantially, and there are a couple of drivers which could cause this, one of which of course is the very substantial base effects from last year when the inflation rate went towards 2%. Another reason of course for this year-on-year measure of inflation is the fact that we're at risk of high oil prices, and of course have already seen them increase this year, and if maintained, and of course if we do see some further rand weakness, we could obviously see upward pressure from inflation from that source as well. And of course also the concern even that we could see upward pressure coming through from food prices this year, given that we are seeing seeing significant increase in international food prices. And of course, South Africa does have a very significant weighting in this basket.
Stats SA is also expected to release the consumer inflation data for December. The CPI is forecast to have moderated slightly to 3.1% year-on-year in December from 3.2% year-on-year in November. The Reserve Bank expects inflation to average 3.9% this year, up from an expected 3.2% average in 2020. Lura Sefako Musi, SABC News, Johannesburg.